Good morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, December 30th. Day and a half left of trading for 2015. What a year it's been. We've had pretty much sideways action for about 7 months, and then all hell broke loose in the summer, and now we're back up to these levels of resistance. I would basically say call it a day if you have if you're really not doing much and you had a good year, a good month, or a good few days. You know what? Leave off on a positive note and enjoy with family and friends the new year. I think that's the best way, best advice I can give. But we're still at the videos. Today will be the last video, daily video. Over the weekend, I'm going to put out a longer-term perspective of 2016 of what I'm thinking, where 2016 may be headed, at least in the short term, because these are short-term videos, the first quarter of 2016. And as all of you know, I am seeing not a pretty sight for the first quarter of 2016. Now, as we all know, technical analysis changes very quickly, so just keep that in mind. Now, I'm going to go through the charts, but one thing that I do like to follow, and I'm not an economist by any stretch. I'm a technical analyst and trader, but I do like to see some of the big economic reports at the end of 2016. That kind of gives me an idea of what happens, and we had exports come out yesterday, and exports were down 2%, but if you strip all of the bigger numbers, we actually were lower by 7.9%. That's an average decline of November of 4%. Now, that's not a good sign, because when we have weak export demand, it's a really big contributor of industrial production, which we've been down all year of 2015. And if this trend continues, it definitely sets the stage for a poor start for 2016. And what happens is that when industrial production really has a significant influence on the economy, and if that's the case, I think that it's all the signs are telling us that we're going to have at least a pretty bad first quarter. So that's what I like to look at, some big numbers, okay? And that's one of the reasons why I'm putting this video out for today. So industrial production looking pretty bad for at least the start of 2016. And of course, what's going to be driving this market? It's going to be earnings. And I think earnings is going to be a big market driver. And if you think that a lot of these companies are beating earnings, think again, guys. It's not going to look pretty, and especially what they're guiding. Okay, the guidance is going to be key for the first quarter market drivers here, whether it be up and or down. Okay. Now remember, we had that so-called Santa Claus rally. We did get a little bit, and I just to me, it was nothing encouraging at all. Aside if you compared the last 5 or 6 years. But anyway, the key for commodities and stocks are going to be the dollar, UUP index, and I'm putting out a video. And we have a Pro Trade Elite video that we have for our subscribers. And we do extensive research with tons and tons of charts, tons of indicators that really get you on the right side of the trade. But in this video, I want to show you the dollar. And this right now, we really haven't gone anywhere other than this small little bullish falling wedge pattern. And you can see here where we're just kind of sitting and hovering. And it's probably going to be that way until Monday, at least until Sunday night's opening trade. So just be aware of that. But that's going to be a big market driver for commodities. And here's the USO. Excuse me. We're just kind of jumping around here again. I am still looking for a little bit of lower prices in the crude oil trade. Okay, the CL contract, which I don't have up here, but I'll show that to you on the next video. I'm really looking for a $32, $34 print. In that area is where I'll be looking to buy some of the higher end oil stocks. I think that's going to be a better bet than actually buy the commodity itself, at least for now. Okay. Take a look at gold. Gold is another big trade for 2016, which I'm watching, and I'm hawking this trade. I'm looking at the GLD contract to break below 100, and this is the area here where I'm looking at. Break below that to go lower, and then I think gold will eventually break out higher, and I don't think you'll see that print. I'm looking at a 980, anywhere in the mid to low 9s, 950, 940. Somewhere in that area. Again, I'm going to do an extensive report on gold and oil in itself. So look for that report come out, this video come out soon. Hopefully by the weekend I should have it out for you guys. Now, spiders. I want to get to the indexes. Now, we talked about the low here, and I think it was a few days ago, and I said, look, we have to hold here, otherwise this M formation. If you guys recall that, we did held the lower end of the trend line, and then now we're bouncing back up here and looking to challenge the upper end of this trend line. I don't like this. I don't like this rally at all. I call this rally suspect. I think this thing yet has to be proven. We do have the momentum indicators, the RSI, MACD starting to roll over and looking pretty good, looking a little bit better. I like to see us break this lower, these trend line areas, and break higher. Okay, still needs a lot of work. MACD, as you can see below here, starting to curl higher, and we also have our Bollinger Band starting to curl in. So that's telling us that pressure starting to build here. Okay, so does this bull flag break out, and do we break out higher? Like I mentioned in yesterday's video. Again, I say let's let it be, and let the market tell us which way this thing breaks out. Of course, when it does break out, let's look for that higher low from here to this previous low, and then look for that breakout higher and or that breakdown. Remember, guys, this is what we want to do. We're still in a trading range here. Let the market tell us which way this thing wants to go. Okay. Now, obviously, when we're day trading, we could still dial down into a smaller time frame, a 5-minute, 10 or 15, whatever you guys prefer, whatever's in your trading plan, and then look for support, resistance, and then, of course, have that bias that we have right now that we said we're looking for that little Santa Claus rally, and then look to stay on the trend of the day, which as of right now, as you know, is up because we're bouncing in between these upper and lower trend line areas, okay? And that's really how you want to play that. Transports, just a terrible, terrible looking chart. I've been saying this all of 2015. Watch out for the transports. If the transports can't rally, guys, the market's not going to rally. I mean, it'll gyrate up and down, but the markets will not rally that long as we have our main leader here, transports, going lower. And now this is another bull flag. You can see that right here. Bull flag, and I would suspect that this breaks lower, guys. And if that does break lower, I think that's going to help the sell-off that I am anticipating into 2016, the early part of 2016, okay? Russell 2000 ETF, IWM, again, same thing. You could see the bear flag pattern. These two have been pretty much neck and neck on patterns. I mean, not looking good. I am looking for a trajectory lower right into this area. That's going to be the next target. I'm looking for that break. Once we break lower, okay, once we break lower, I'm going to be looking to set up and sell rallies until we get into a good area of support. And until then, again, I'm treating any rally as suspect, reducing my share size if I am in the long camp. And I look to trend. I'm a trend trader, and I like to see the markets. I like to follow the markets and what it's telling me. The longer term picture looks ugly, but if you're trading intraday, obviously we trade what the trend is for that day. But again, Russell 2000, ugly. Okay, diamonds. This is our lagging index. Obviously, that we have a bull flag, which I'm going to pull this out, this bull flag pattern out. It's getting a little too long in the tooth. But you see the M formation here. We tested that neckline down below here, and then, of course, we rallied up here. So it's a do or die for the next day and a half if we break out or not. And again, we could break out on Monday. We could break out on Monday, and it would not fathom me at all if the markets broke out, get everybody long, and then sell off. So, and believe me, that's what I'm looking at. Remember, you'll hear me say this all the time, guys. Since I've been putting out videos since 2009. The markets are made to fool the masses. Remember, think like an institutional trader, right? Remember, don't think like a retail guy because they're all looking to get everybody long and or short and then reverse course, okay? Last, it's going to be the Qs. As you can see, we had a good day. Well, a lot of the bigger cap tech stocks, Apple, Amazon, Facebook, they all had great days. Google had a great day yesterday, and that's fine. And I do think that a lot of the bigger funds are marking up their books to get into that 2016. So just beware and use caution here, okay? Guys, look for my video over the weekend. I'm going to put out, like I said, a longer-term perspective. And at one point, I'm going to put out a video only on gold and on crude oil. Okay, I got a lot of requests for that, so I'm going to honor that request and put out a decent video, and I probably look to put that out there as well. Right? Happy New Year to you and your family. Be safe out there. Prosperous 2016 to all, and we'll see you on Monday, the new year.